Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas.
Today we have an update on Dabur India. Our analyst maintains buy rating on Dabur with an unchanged price target of Rs 750. The company's stock price has corrected by 15% in last 1 month, especially after declaring weak quarter to pre-quarter update. It is trading at an attractive valuation of 48 times its FY25 and 40 times its FY26 estimated earnings, with expected recovery in the rural demand on back of better monsoons and sustained support through government initiatives. Pickup in rural demand and company's internal initiatives will aid in better volume growth in second half of FY25. Thus, second half performance is expected to be better compared to first half. Next we cover Honeywell Automation. Our analyst maintains buy rating on Honeywell with a target price of Rs 60,000, factoring in the government focus on infrastructure sectors like oil and gas, refining, power, chemicals, metals, etc. It continues to focus on industrial digitalization, automation and sustainability, which is expected to drive revenue growth for a longer period. A wide and rich portfolio of products, solutions, digital software and services enables it to participate in multiple opportunities. An asset-light model, which is nil debt, strong cash position, healthy free cash flow, and promising long-term growth prospect in the automation space justify the stock's premium valuation. We expect company to clock a revenue CAGR of 19% and PAT CAGR of 26% over FY24 to 26. Hence, we retain a buy rating on the stock with a revised price target of Rs 60,000.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.